Hello everyone and welcome to Investing with Vasco. I'm Vasco and here we discuss stocks, the stock market, investing, trading and everything related. Hope you're all doing good, and today we're going to be discussing what can potentially be a huge opportunity in the stock market, and that is the upcoming Airbnb IPO. And what we're going to do in this video is we're going to do our analysis of the company. We're going to weigh in the good, the bad, and discuss our game plan for this upcoming IPO. Since this is my first video, I want to ask you all to please smash the like button and subscribe. It'll really help the channel grow and it'll mean a lot to me. Moving on to the main topic of the video, the company Airbnb is set to have its IPO this month on December 9th. This is going to be a massive day for investors because Airbnb is a company known all over the world. I still remember the first time I used Airbnb. I was on a holiday with my girlfriend and a group of friends, and we all went to Madrid in Spain to an amusement park. We rented a house there, of course, and I can say that since then, every time I go travel, I always check Airbnb first. Before any hotels, always Airbnb. That's why I'm really excited about this IPO. However, before investing in the company, there's a few things you should know. The company wants to raise $2.5 billion with the offering of 51.9 million shares at a price between $44 and $50. This gives Airbnb an evaluation of over $30 billion, which is almost double its valuation in the first half of the year, which was around $18 billion. However, this $18 billion valuation is related to pandemic problems. If you look at the valuation of 2019, the company was valued at $38 billion. 20 billion more. This may be great news for us investors because basically we're getting an IPO at a discounted price, if you understand what I'm saying. For example, if we didn't have the pandemic, the IPO could start with shares at around $70, $80, who knows. Since the company had a hard time this year, we get prices between 44 and 50, which is great for us investors. If we based our valuation on the company's results this year, we would see we're getting a more expensive stock price than what the company is currently valued at. This year was particularly tough on Airbnb. Their revenues dropped by 32%, they had to lay off 25% of their global workforce, they reduced salaries and slashed sales and marketing budget down by 54%. However, this year was one in a 100-year event, and as traveling returns to normal, so will the company's business, and with it, the potential for us to double or even triple our investments. Even with that said, there might be danger in this IPO if you are thinking of jumping in straight away. This particular market of online travel booking websites is still a market in the process of consolidation. And as for the top 5 players, we have TripAdvisor, Booking.com, Airbnb, Expedia, and Trivago. Out of the 5, Airbnb was by far the company with the highest growth from 2017 to 2019 in terms of revenue, from 2.6 billion to 4.7 billion, meaning an increase of over 80%. On the other hand, we had Booking.com with an increase of around 30%, Expedia with an increase of 20%, TripAdvisor stayed around the same, and Trivago had a decrease of around 20% since 2017. And this is great for Airbnb because it means that as the market grows and consolidates, the company is growing its market share. In my opinion, we can expect 2021 to be a year when things start to go back to normal. And then in 2022, we might see the start of a huge run-up down to 2025. Looking now at the company's financial performance, here we have the monthly gross booking value trends. We can see the company took a huge hit in March, where its gross booking values dropped by 127% year over year, and that is a lot. But after that, we can see that it's slowly getting back to positive numbers. Also, we can see that in the beginning of the year, we have a growth of 24% in January and 15% in February. In this data, we can take a deeper look at the damage suffered by Airbnb, and we see that in June of 2020, the revenue went down from 1.2 billion to 300 million compared to June 2019. We can also see a huge slash in sales and marketing expenses. However, even with this huge cut, we see the revenue jumping back to over $1 billion in September 2020, effectively quadrupling since the last quarter. However, even with this big raise, the company will not be profitable this year and probably won't even break even. This, in my opinion, will change by 2021 as the world starts to return back to normal. The company has over 150 million users and over 7 million listings all over the world, which will continue to increase on the upcoming year. So now for the game plan. Even though I do believe this is gonna be a huge company in the future, I am not jumping in at full gas on the IPO day or any day close to it or even weeks. Instead, I'm gonna be opening a small position in the company of around 20 to 40 shares and then dollar cost average until the summer of 2021. My guess is that because of all the hype surrounding the company, we're gonna see a huge price increase over the next days or maybe weeks, and then a big correction because of all the investors taking their profits out. So I'm gonna be taking a safer bet. I'm gonna get in right at the start with a small position and then build it from there. The reason why I'm taking this as a very long-term play is because I do believe in the company, and as you all know, it's a huge company around the world, and I do think that it's going to keep on growing. And when it comes to numbers, I do think this has a possibility of doubling or even tripling our investment by the end of 2021 or 2022. But I still want to take the safer bet in this company because there's so much hype around it, and I do think we're going to see a big correction. I've seen this happen many times with other companies. For example, Lemonade, they had their IPO this year. The company shot up to $80, maybe $90, I don't remember quite sure. And then, of course, they had their correction and the stock went down to the 50-40 range. Right now, what are we seeing? We're seeing more and more people going into Lemonade, of course, and it's almost at $80 or $90 again. And this correction that happened is the time for us to get in and start increasing our position. So I'm going to get in at the start, and then when the correction happens, I start putting more and more money in until the summer of 2021. By the way, guys, if you're going to buy the stock, please let me know down in the comments. I really want to know what you guys think and your thesis on this investment. So this is it for today, guys. I hope you liked the video. If you did, don't forget to subscribe and like and share with your friends. I'd really appreciate that. And I hope you all stay safe and see you next time.